Good morning. I hope you're doing well, and welcome to today's edition of the 600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Analyst with Trade Captain and AmanaCapital.com. In the next 600 seconds, I'm going to provide you guys with a brief and quick overview of markets such as Eurodollar, Bitcoin, gold, crude oil, and the DAX 30. Before we start, as always, I need to stress that trading financial markets is unfortunately risky, and there's a genuine risk that we'll lose all of our invested money. So please bear that in mind before you start trading. Okay, good. So yeah, it's January 10th. Let's take a look at the markets. And we'll begin with the Euro versus the USD. And if you're new to this is a daily webinar we conduct here at tradecaptain.com, Monday to Friday at the live trading room, which is up here. And let's begin. So this is the euro, and you're looking at a 4-hour chart, and you can see how the euro against the dollar right now is at 119.46. That means that for every euro you need to pay $1.19 and 46 pip to acquire 1 euro. And since November, you can see how the market has been creating higher and higher lows. So with that in mind, I do think the market will try to bottom out between 119.52 and pretty much 119, if not all the way down to 118.13. If we trade below this low, then I'm gonna give up on the idea that we're gonna create these higher and higher lows, and I will just abandon this bullish view on the dollar. In fact, if we trade below 118.13, the market might continue to slip a little bit lower and maybe reach and then trade as low as 117.12 down here. So no major change to the outlook, just waiting for price to bottom out here. It could easily take a few days before that happens, and then for price to reach the high. If we took out the high, which is 120.93, which is pretty much last year's high as well, then the market could potentially reach 122.46. This is the price of Bitcoin, and Bitcoin is under pressure today. In fact, most crypto coins are under pressure, at least of the big ones. Out of the big ones, it's just Ethereum that is doing all right, and Ripple, which was doing good. Of course, if you traded that and was long, in fact, I was long, bought some already in December, and we had a nice rally to the upside. But unless you cashed out on that, I mean, you're in pain right now because Ripple is moving down. So it looks to me that most of the cryptos gonna be under pressure, and Bitcoin, of course, being the big one, this is no difference. In fact, I think the fact that Bitcoin is going down a little bit here, is one of the reasons why all the other coins are soft as well. Now, from a technical point of view, as you might remember, I said here in December that it's possible to buy down here. One buys for a small part of the portfolio. Depends on how you trade, of course, but with a smaller amount. And then when the market finally bottoms out, one will look to add more. Now the market moved up higher, and it does look like we're going to head to the upside, but we're back down to the low, so we're not out of the woods yet. Maybe we're going to trade sideways between this high here and this low. That's what I think, at least. And maybe eventually we'll break to the upside. I'm not sure when that's going to happen. Now, looking at the big picture, you have a low here on November 12th, another low here on November 30th. You have the low here from December 22nd, and then you have this low here from December 30th. So above this level, the trend is bullish, and we're approaching that level now. So a little bit like the euro, I do think, in essence, this whole section here is probably going to be viewed as an opportunity to buy. And it's probably going to take a few days before this actually even bottoms out and then hits the high. All right, so no change to the outlook, but obviously it's not looking too good right now. But we should never abandon the view until we actually take out the lows, because when we take out this low, then yes, the trend turned bearish, and take out 11,919, then the market might try to reach this November 30th low at 8,961. Here's crude oil, and here we said yesterday that if we take out the high at 62.51, that we could reach 63.44. We did that, so congratulations if you traded on that. In fact, congratulations if you're still holding these long positions we discussed down here when the market was at 159. Now, I think this market could head to the upside, and I do want to be bullish above 61.04, which is this level down here. Now, for some reason, my lines here are gone, so I'm gonna outline the targets again. So I'm using a daily chart, and you have a low here created in 2010. That would be a good target. Then you have another level here from 2011, another low here from 2012, and another low here from 80, well, at 84 from 2012 as well. So these are potential targets to work with, and let's just go back to present time. So in the short term, I do think this market could pull back a bit. You have the prior breakout level around 62.31. I think from this level, traders might again look to get involved and turn bullish, and then this market could head to the upside, okay? And then potentially even higher. You have several psychological levels, 165, 66, 67, which as well are potential targets. For now, wouldn't buy here. The idea was to buy here already a few days ago, or yesterday, sorry. If it goes down, I think traders are going to look to get involved again, and I think they're going to be bullish as long as trade above 6104. Here is the price of gold. Gold is a bit complicated with the big picture. I've shown you this several times. In the short term, it's down, up, down, so it is struggling to trade to the upside. But because we have that bullish trend, if we take out this high created earlier this week, oh sorry, this must have been Thursday last week, and it's the 1,326 level, then this market might rally to the upside, okay? Till that happens, I think we're going to trade sideways and eventually just drift lower to 1280. If you look at it from a big picture perspective, this is your daily chart. The market is clearly just trading sideways here, so eventually back to the middle, and unfortunately the way this is looking, it will remain sideways for at least 6 months to 1 year before we break the upside or break the downside. Here is the DAX 30. So the DAX 30 is not as easy to trade as say the S&P 500. Now the market, I think, is in some sort of consolidation phase like this one. And don't forget, the Germans are really good at what they're doing, and I am 100% certain that in the long run, which could actually be 6 months, 1 year, then this thing is definitely going to be higher just because the way they operate, right? And I do think that the Eurozone in general, economic growth is going to continue, and with that in mind, I do think that we're going to continue to see some gains in the German DAX. Now in the short term though, it's a bit more complicated. The market rallied strongly from the low. That's a nice gain here of about 5.42%, which means that traders, if they want to buy right now, they need to put a stop loss here, which is 4.5%, which is just a little bit too much if you're trading in the short term. If you're a bigger picture guy, then who cares, like pension funds like that, buying a little bit every month. You do that for several years. It doesn't matter where the market is at. But if you are trading more actively like we're doing here, then you need some sort of a nice pullback. So I do prefer the S&P over this, but if this market comes down a bit, maybe to the first fib at, actually let's adjust this to the 50 fib. I think that's probably a better idea. So 13,067, maybe from these levels. If we have a pullback, I suspect traders are gonna like this better. Why? Because down here the risk is 2.68%, and if we go to the upside, a potential gain is 3.58, and obviously if we go to the upside, then even better. Good morning, Simon. Thank you so much for joining me, and thank you everybody else that have been joining me. We started these webinar, obviously we've done them in the past, right? I guess a lot of you guys know me from maybe Daily FX and FXCM, but here at TradeCaptain.com we started these just recently, and we're getting more and more people, and that's awesome. That's really good. So I want to thank you so much for your support, and it's really important that you do support, just because if we see that something is busy, then obviously we want to do more of it, and vice versa. Okay, good. 600 seconds have passed, so I want to thank you so much for watching. If you are trading, don't forget to download maybe a demo account if you want to learn more about trading in general. It's always good to have a demo account. Very straightforward. Amana Capital offers the MT4 and the MT5. I suggest the MT5. It's the latest version. Looks like this. You can just trade, do dummy trades and things like that, just to learn. Very straightforward. Looks like many other trade MT4s. So you can check this out. As well, if you are already trading with other brokers and you like this, don't forget to maybe support us by trading. Open up a second account with maybe amount of capital and trade once in a while. This way we can keep this website up and running. Guys, have a good day, and I'll see you guys tomorrow at 9 a.m. London time. That's all for today. Thank you.